Hello, and welcome back to our series, Vertical SaaS, Fintech Disruption by 1,000 Cuts, sponsored by our friends at Pipe. In our last episode, we talked about product development and customer centricity in vertical SaaS. In today's episode, we delve into embedded finance. As we've been discussing in this series, vertical SaaS platforms are the ideal distribution channel for B2B financial products. But how does the process of embedding financial products within vertical SaaS platforms actually work? How should these platforms define their fintech strategy? How should they sequence their fintech product roadmap? And what risks and challenges do they need to be prepared for? The right person to ask these questions to is Ethan Senturia, president of Housecall Pro. Housecall Pro is a vertical SaaS platform that focuses on empowering home service businesses, such as pest control professionals, electricians, plumbers, and HVAC installers. Prior to stepping into his role as president, Ethan served as Housecall Pro's SVP of FinTech, and then later Chief Fintech Officer, which is, in my humble opinion, the coolest job title you could possibly have. There is a staggering amount of insights into embedded finance and vertical SaaS in today's episode. So be sure to grab your notebook and pen. And without further ado, here is Luke and I's conversation with Ethan Senturia, president of Housecall Pro. Ethan, thank you so much for joining us.
My pleasure. Thanks for having me.
We are delighted to have you. This is the episode where we dig even deeper into the fintech strategy behind embedded finance and within vertical SaaS. So we're going to get there. That is kind of a core area we want to focus on in our conversation with you. But before we do that, it would be wonderful if you could provide us a little context, something we've been asking on all the episodes we've been doing since vertical SaaS is so different, vertical to vertical. Would love to get a little bit of an overview on what Housecall Pro does and sort of how it's evolved over time.
Sure. Housecall Pro is a complete business and financial operating solution for the small and mid-sized home service professional. And so what that means in practical terms is that it's a single system that gets them everything they need to succeed. When I say home service professional, you can think of this as like an HVAC technician, an electrician, a cleaner, a garage door repair. There's a lot of different segments within it. But that's the customer we serve. They're primarily working in and around the home, doing pretty much essential work. We have had an interesting journey, right? Like our platform started. I got to the company about 5 years ago. The business, I think, has got about twice as much of that as history. So I think it's 10 years of selling SaaS to pros. We call our customers pros. And the roots of the platform was really in what we'll sort of refer to as the core job workflows. And so this was, I need to price jobs, win those jobs, and then execute those jobs. And for a number of years, that was really the focal point of the platform. And that was what many pros in the market had pain over: managing a calendar, scheduling, dispatching technicians, sending invoices to their customers, those sorts of things. But, I think we were relatively early in identifying that there was an opportunity to blend fintech with this core job operating system that we had delivered, and also just become a complete system for the pro. We can talk more about our customer, but they're generally pretty small. They don't have big staff. And so around the time that I joined, we reset the vision of the platform to be all the things. And one of my counterparts here at the company went upstream into pro workflows around, well, how do you get customers and how do you manage those leads and how do you communicate with those customers, which led to a whole other set of platform capabilities. And then I went the other direction, which is like, okay, you finished the work and now you want to get paid. And after you get paid, there's this whole slew of cash management and back office operations that you have to do simply to, exist as a business in our society. And that's really where I got into the company. And so combined over the last few years, we've built a complete system and had a lot of success with pros, and it's just made a big impact for upwards of 50,000 pros at this time.
Wow, that is amazing. So one follow-up question on that. which I just am really curious about, and it's been coming up in our other conversations as well, is kind of double clicking into the who the pros are point. One thing I've noticed is that there's sort of two different ways within a vertical to think about segments within that vertical. And I'd be curious how you guys define this for yourselves. One is kind of sub verticals, right? So like electrician versus HVAC versus I had a nest of wasps in my wall at my house, so I'm very familiar with like pest control recently. That's been my brush with the service industry. And to your point, essential services.
A shop vac with some soap in the water will actually take care of a wasp nest pretty quickly. Sorry, keep going.
No, I wish, Luke. Honestly, I wish I was brave enough to do that. I did the first pass at it myself, and nothing even came close to working, and the wasps seemed more annoyed than anything. And at that point, I was like, time to call a pro. And my wife, of course, had been an advocate of like, don't even try to do this yourself. So anyway, I am all in on pros supporting us homeowners. So one way to think about your saying, okay, we have home services broadly, and then kind of verticals within that. The other way, obviously, which you already touched on, is size of business, right? In terms of like independent operator up to, hey, I have an office with multiple field technicians, and I'm kind of coordinating that to multiple offices to very obviously massive businesses in this space. How do you segment the market, and then what parts of the market have you kind of decided to hone in on?
Yeah, the short answer is both, right? Those two, the cross of those two dimensions, kind of industry by org size at a high level, is where we draw our sort of segment boundaries. And so you can imagine that could lead to lots of segments. There's some industry categories, so for example, a core segment of ours is mechanicals. So those are pros who work in plumbing, HVAC, electrical, garage door repair. They tend to be sort of the leaders in terms of technology adoption, in terms of business sophistication. They tend to do bigger job sizes. And so that's an area that sort of, where we've been focused and where we have, a significant position in the market. But then, you look at within a mechanical, for example, well, a one-person shop operates very differently than a 20-person shop. And so you have to acknowledge that, a HVAC shop and a home cleaner are very different. And within each of those, a one-person business and a 20-person business are very different. And so we look at the market segmentation sort of at the crossroads of those two things. And then beyond that, you have to really look into the personas of the customers, because not only do you have sort of what are the core jobs to be done based on what industry you're in or based on what your organizational size is, but it's also the things like, how a technology adept are you, as an example? Where are you coming from, right? Did you come from another system? Did you come from pen and paper? What are the ways you want to be able to engage with the system? Do you desire more control, or do you want the system to do things for you? And so within sort of those segmentations on industry and org size, you have a lot of persona characteristics that also impact sort of the way you configure and deliver the platform to the customer.
It's super interesting because you almost have to have like 7 or 8 or 9 different products. Like one, as you describe it, you need one that does the stuff for the sole prop or individual person across multiple industries, but then you have to let them grow as they hire their first 4 employees or 5 employees, and then like lease a space and have inventory and then buy more trucks. Like to be able to have them start with you and grow with you is pretty cool, actually. And like, I know a lot of HVAC companies that also do electrical and plumbing. And so they may be doing more across the whole mechanical. Like I was an electrician's helper in Texas, like Sherman, Texas. Like one of my first jobs was like driving the truck to Granger to pick up the parts so we could like swap in the switches or do a fan, or crawl into the attic to connect the ground wire, because I was the new guy when it's 140 degrees in the attic, right? But like you have to like really, like the fact that you're letting them grow with you is pretty awesome. But making it a seamless product as they step up is really hard. I'd love to hear how you think about that.
Yeah, I mean, it requires a lot of platform configurability, modularity, right? You need to be able to. There's different levels of readiness, right? Like early in a market, you're getting the early adopters, and they're just eager to pick up everything and start using it. As you get deeper into an adoption curve, it changes a little bit. You know, it gets marginally harder to bring the next person in the door. They may say, well, I'm not ready for all of the capabilities that your platform has to offer. And so like in vertical SaaS, a lot of these platforms, they start around this concept of a control point. I think that was like, I can't remember, Tidemark or someone coined that term, right? Like, and you got to sort of own that control point. But then very quickly, people go like, oh, we need to be multi-product and we need to have all these different offerings and we have to do TAM expansion. And then your platform becomes big and complex, and you almost end up with something that's like SAP, and you're trying to deliver it to this
QuickBooks.
Yeah,
QuickBooks is a good example.
Right. And you're trying to deliver it to a small business, and they're like, "Whoa, you know, I'm not ready." So some people are, some people aren't, and the ability to sort of decompose your platform, have some packaging flexibility, be able to put the right set of capabilities in front of the pro at the right time in their customer journey and their business life cycle, and then make it seamless for them to just kind of unlock more and more features and capabilities in the platform as they're ready, or as the platform can sort of assess for them that they're ready. That's really key. And especially as you move into the later stage adoption curve, right, the later adopters, you got to get to people earlier in their decision making, you know, well before they're ready to come in and say, I know I want what you have. You have to sort of, how can you establish touch points with them? And part of that can be done by sort of, you know, having a little bit more slice and dice, so to speak, of your platform.
Yeah. Well, and the other thing that we're kind of touching on a little bit, but I'd love to ask you directly is, as we've talked to different companies in different verticals, one of the things that's become really clear is the level of like knowledge that you end up having about your segment of customers is just very different and much deeper than what someone on the outside would know. So take us behind the curtain just for a second on sort of home services pros. What's something about that particular segment of business owners and operators that someone, and it could be like a small subtle thing that just sort of is like, you know, something unique to like the way you design the software or like how you work with these customers, that someone operating in a horizontal fashion or just not familiar with that vertical maybe wouldn't understand?
Yeah, it's a good question. I'll go back to one of the first things that I was told when I got to Housecall Pro, which was there is no such thing as a pro. A pro is our term, right? It's an easy way for us to refer to a big market in a homogeneous fashion.
Yeah, this feels like there is no spoon in the matrix.
There's no such thing as a pro. There's plumbers, there's electricians, there's drywallers, there's roofers, and that's their identity. And so acknowledging that reality, it's what makes the market hard to tackle.
Sure.
Because there is not actually the homogeneity that, you know, we try to ascribe to it as sort of, you know, technology operators.
Sure.
You really have to understand and deliver on the reality for our customer, which is they are each unique and they each have their own unique identity. And that is quite central to who they are. And they expect the systems that they use to acknowledge and reflect that. And so that was the first sort of the first and probably most important piece of advice that was dropped to me in my first week at Housecall.
It's super interesting because like at Intuit, because they serve so many different business types, the way they talk about that is just task completion. Like what task is the business owner completing? Is it booking an appointment? Is it taking a payment? Is it sending a bill? And like they just they end up with a spaghetti system that can do everything, as you said, like, and it overwhelms people, but it can do all those tasks. It just doesn't do them as well as a SaaS vertical can. And so I guess as you think about the tasks that these businesses are completing, they're similar, but still very different based on like which sort of vertical within the vertical you're talking about, right?
Yeah. I mean, you talk about just like work, like examples, or this one just, it's sort of it's an obvious one once I say it, but like it wasn't obvious to me when I first got here, which is like, you know, HVAC is going to price on time and labor, right? And painter is going to price on square footage by number of coats by quality of paint. And a roofer is going to price on, measurement based on, and you're like, but it's just pricing a job. You're like, no, it's not just pricing a job, right? They all do it slightly differently. And if it doesn't work for them, it doesn't work, right?
Well, that's a great point, right? Because I think the core idea which keeps coming up in the conversations Luke and I have been having is it needs to make sense to them, right? You can't go to a painter and be like, well, you know what we mean. Can you do the math in your head to calculate how you want to price it the way our software works? No, that's not going to work. And even if it makes sense to other people who are nominally in this large vertical, as you said, there is no pro. There's painters and HVAC installers and plumbers, and they're all different down to a very minute detail. So that's a really, really great example. I want to now talk about embedded finance and fintech specifically. And something I didn't realize, Ethan, about you before I was doing a little research for this episode is that before stepping into the role of president, you were the SVP of fintech and then the Chief Fintech Officer, which, by the way, side note, that I think is the coolest job title in fintech by far, is working at a vertical SaaS company and being the fintech guy to the point where you can be the Chief Fintech Officer. Yes, and I only ever see this in vertical SaaS. I love this. And I'd love to know what you did in those roles, how the company at the time was thinking about fintech and embedded finance as a part of its strategy.
Yeah, it's funny because as I had those titles, I loved the job. I think it's if you're in fintech, I don't know, vertical SaaS is like being a kid in a candy store, right? It's
totally,
there's no better. But I came into this company that kind of had 3 or 4 people in the corner doing fintech, and people I don't know, they're doing this fintech stuff over here. And then the rest of the company was out serving the pro and helping them execute jobs and price and win and those things that we talked about. And so it was a bit of a weird title, to be honest. It was I think I showed up and most people were like, what? Why are you here? Right? What are you going to do? And I was like, that's a good question. And I think almost 5 years in, most vertical SaaS platforms would now ask the different question, why aren't you here? Why isn't there a, SVP fintech, whatever the title may be. And so it's been just a really cool evolution to be part of a vertical SaaS company in that role, kind of as the accepted wisdom has been you need this, right?
Totally.
Which has been great. When I got to the company, I think it had been grappling with whether it needed to invest, I'll call it, in a dedicated fashion in fintech. To some extent, what do you do in fintech is no different than what you do in other parts. You develop strategies, you build products, you go to market with those products, you optimize your revenue per customer, et cetera, et cetera. And so it's well, we already have people who build product. We already have engineers. We already have, product marketers. Why do we necessarily need fintech specificity? And I think the business sort of came to a conclusion that it needed it. I can't say exactly why or how, but it had seen enough internally that okay, if we as a platform are going to really make financial services a pillar of what we deliver to the pro, we're going to go bring some expertise in. And for better or worse, they thought I had some expertise. And so I got there and the business was relatively nascent, but it had a big vision, right? And that vision was anchored really around, all money in, all money out, right? And I would talk with the CEO, his name's Mike, and we would just go, okay, all money in, all money out. And I kind of wake up every day and I'd start and, do a few stretches and okay, all money in, all money out. And I would literally, I would tell my organization, just say that to yourself. And so what that meant was we needed to go understand all the different ways that pros wanted to be paid. We needed to go understand all the different ways that pros spent, the way they saved and stored that money, the way they managed cash in between, and whether they borrowed and who they borrowed from and what types of instruments. And then we had to go figure out how to put all that in the platform in a way that serve a diverse customer base and do it fast, right? Because we're a growth company, and so we want to go fast. And one of the things that I think was valuable about the company investing in fintech sort of knowledge and specialization, as it had this big vision, was like, there is attention always in financial services between, going fast and, being prudent and being safe and responsible. And, even as a platform that is in some cases leveraging partners to consume a lot of the risk and compliance and regulatory footprint, you still have a fair bit of that to contend with. And so that was kind of the vision, and that's where we started. And then we went about doing it. And as we started to bring more of those financial capabilities into the platform, so sort of real rails, right, ways that money moves and gets paid or gets spent, then the next question became, okay, what about those money adjacent things? Like, well, you got to do your books, and you've got to pay your taxes, and you got to file at the end of the year, and you got to insure your assets and make that sort. And so that gave rise to another set of opportunities that we call business solutions, which are really, they're money adjacent, but they sort of represent those core back office administrative and compliance functions that like every business needs kind of as permission to play. And so those two things played nicely with each other, and that really represented sort of like the two-step sequence over the last few years for us.
It's so interesting because you're way ahead of other SaaS verticals on this stuff. Because you had the foresight 5 years ago to bring in someone like you who had fintech experience before that, like deep fintech experience, to come in and say, hey, like we know how to build this stuff, or we build by partner decision on every single one. You start to roll things out rapidly, right? And you're even, frankly, like going after Intuit now with that the way you talk about the back office stuff. Like that sounds just like the Intuit CEO talking about what QuickBooks does, right? And just automating all that stuff away to where you don't actually need those other software tools anymore. So like you may be the first vertical that gets to that end goal of all the money in and money out. Like I talk about Pipe in the same way, by the way. I don't do the money in, money out meditation in the morning. I probably should start doing that.
You should. Yeah. That sounds good.
But like that's the thing. I've told people so many times that my roadmap has not changed since I got to Intuit. The underlying small business pain points are all the same, right? Like the big ones. The how you solve them has changed dramatically with horizontal to vertical, like you guys are focused on, but you end up with the same roadmap. You start with like the number one pain point, which is access to capital, and maybe spend management and bill pay. Taking payments is usually actually the first thing. But you go taking payments, capital, like bill pay, spend management. You're even going to like embedded accounting, right? Payroll, I think you guys also have on your roadmap probably. And so it's all of the money in and money out. It's like starts to show up, and you may be the first that has that much of the money in, money out. And like my hope and excitement for AI is that once you have that level of detail and data at the transaction level, you'll create stuff that's super amazing for the small business customer to just like understand what's going on because you have all the data for the first time. Intuit doesn't have it. Like Housecall Pro might, right? It's pretty cool.
So building on the point Luke just made, I would love to talk about kind of the roadmap, right? Because now that I'm doing my all money in, all money out meditation, which I'm now, that's going to be stuck in my brain. I love that.
Me too, man. I love it.
I think that, it does pose a really interesting question about where you start and then how you build on top of that. And I'd love to, and maybe you can take us a little bit in the past when you guys were first kind of executing on this and then kind of talk us through how it's gone. But like as Luke was saying, payments is oftentimes first, right? In the sense that like, no matter how ambitious or non-ambitious we want to be about financial services embedded in our platform, we know the customers we're serving, their businesses, they need to get paid. So like getting paid, very, very important. So maybe you can kind of take us back to those very kind of early steps. And then I'd love to get a sense of like, once that first thing is kind of figured out, how do you start to widen the aperture a bit? Because as you're saying, like, in financial services in particular, there is a balance between moving fast, but also being thoughtful about your roadmap and how you tackle these things. Most SMBs don't need a loan officer. They need a runway. Pipe gives small businesses fast, flexible funding by turning future revenue into upfront capital, right inside the software they already use. If you're building in vertical SaaS, Pipe gives you embedded capital infrastructure that scales with your customers, designed for how real businesses grow. Learn more at pipe.com/fintechdays.
Yeah, when I got here, the business had, as part of its sort of core offering, invoices existed. And, we have a saying here, which I don't repeat as a mantra quite the same way, but we say, revenue fuels pros. And so I don't think there was ever much of a question for us that payments was the first place to start getting into a pro's money flows and financial transactions. And we were very early in that. I mean, well before I got to the company, we had started to offer card payment acceptance on invoices. But we were still relatively immature in that area, even as we had gotten to a fair bit of scale. Card payments is great because there's a lot of technology forward solutions for it, right? You've got a lot of players out there, whether it's, the Stripes of the world who we work with, or Adyens or Phoenixes or whoever. But it's sort of a mature as a service ecosystem, I would say, payments as a service. And so that was a logical starting place for us. But one of the things that I think was revealed both to me and to the business when I first got into the company was that payments is a lot more than a product. It's a business, right? Like, it's not just, hey, throw card acceptance on an invoice and you're in the payments business. You kind of are, but then you have to think about all of the cost optimization pieces around that, all of the different rails that are involved and how you want to leverage those or not, how you're going to price it to the customer. Managing risk is a big piece of it. The level of support that comes along with, running a payments program. And so really that's where we spent a fair bit of time kind of hardening the offering, because we felt like if we really are best in class with card payments, it will be a great anchor for the rest of our ability to get into the pro wallet, because it will build trust and credibility with them. When you see something working well, you're like, do more of it, right? And so the next logical place for us was, well, how else do pros get paid? And that's what led us into things like bank transfers or ACH, into pay over time options, different consumer financing programs for our pros to win bigger jobs, sell bigger jobs, do on the job upsell type stuff. So we brought consumer financing products in. And then even understanding who your customer is, we get physical checks, right? Is a large portion of what a homeowner still hands to a pro. And so then we went about, hey, mobile check deposit, right? Let's actually bring that in. You as a pro, we don't want to have you change your behavior to be able to have a digital on-ramp to Housecall. And so we can provide that for you too. And so we really focused on nailing the money, but we focused on really building out the money inside, because it had better product market fit. Our pros and small businesses generally, I think, are more mature in terms of figuring out how to get paid and finding the right ways to collect, et cetera. And they're less mature when it comes to like payables processes. Like, even if you think about Bill, formerly Bill.com, right?
Yeah.
Those are pretty big small businesses that actually use that system. And so that's where sometimes you have to make some decisions around, like, what does your customer want and what are they ready for today? And you have to cross that with, like, what is your strategy long term? And it sometimes leads you to maybe deliver products or solutions ahead of when they're ready. And so for us, we actually went from payments. And I think the next thing we really turned our attention to was, well, if $100 comes into a pro, like these guys are not, e-commerce businesses with 80% gross margin, right? At the end of the day, they got maybe $20 left over. So where's the other 80 going, right?
Sure,
and it was, let's go get into that, right? And so that was kind of the next evolution for us, which led us into card issuance and spend management products, bill payments, and things like payroll. And so that's kind of where the first two steps were. And then that naturally begged the next question, which is like, those things don't always match up in time and space. Then what? And you start, oh, well, the embedded financing space has evolved so much. I mean, Luke, you've basically evolved it yourself, right? Like to the point where it's almost too easy, right? To start offering these types of products to customers. And when you operate in small business, they tend to be cash constrained. And so I can't say there was like a perfect sort of step 1, step 2, step 3. It was a little bit more like we knew step 1, and then we sort of started to take step 2. But at that point, you start to round out. You can sort of see the rest of the puzzle being filled or being rounded out, and then it sort of gets a little bit more fluid.
Yeah.
You just took a follow the money approach. It seems like it's so clear to me though. Like I've been in like product led organizations before, but every feature you talk about is following a customer pain point and like, what is the next thing? Like this is the most important. What is the next thing? Like that thought process has kind of been rampant across all the SaaS verticals we've talked to, but very few of them talk about it the same way you do in relation to the financial services part. They really talk about it in the core product part, and they're thinking about what time you can save them. But you're crossing both in both the fintech world and like how do you do the same thing on the money movement issues and saving time on that stuff. So it's like it's nice to see it come through. Like I've always thought the same way. There's an old podcast of me talking about how Square banking was built, and it's almost the same type of story of like, okay, it's somebody needed to accept a card at the farmer's market. And then you realize, oh, wait, they can't actually pay for their own lunch at the next stall. So you have to get them a debit card so they can actually use their money type of thing. Like that story just, well, I need to put money in from other sources because I want to like actually store the stuff in the same place and start tracking expenses. Like the way you think about it is refreshing because like it is the right way to think about helping these small businesses succeed and like chasing the problems from the biggest problems down to the smallest and just helping them save time, right? It's awesome.
Yeah. And what's interesting about that is sometimes when you actually go with that approach, right, the solution to the real problem is not at all the solution that you were thinking about. And so, when you think about getting paid, you're like, oh, well, like I can get pros to use my payments if I give them an invoice with a payment option. But actually, like the pain points around getting paid, just as an example, like they start way at the very beginning of the pro's life cycle, right? Of like, I have to spend money on marketing and I don't have that money and I can't get paid unless I do that. And then it's, well, like I want to get paid, but I also want to get paid for the biggest job. And so how do you price right? And how do you leverage other, pay over time options? And so sometimes it's easy to think about. I think even when I first got here, it was more of a linear kind of workflow view of like, you get the customer and then you do the job and then you get paid. And like, we'll focus on the getting paid part kind of in that step of the workflow. And as we've built the platform over the last 5 years, we've really taken a tremendous, we put a tremendous amount of effort into understanding where does that workflow really start and how can we say, well, you getting paid is not about a card and an ACH option on your invoice. It's about, do you as a business, create an estimate? Do you collect a deposit on that estimate? Do you require a saved card on file when the card on file is? Do you send invoice reminders? Do you automate those invoice reminders? Do you escalate the tone of those invoice reminders? And so that's part of the beauty of like vertical SaaS and fintech, which is because you have this whole operating system that is where actually the core jobs to be done happen. You can take fintech kind of out of it being the commodity products and infuse it all the way upstream into those workflows. And it just drives a tremendous amount of adoption.
That's a really great point. And it's something I'd love to double click into a little bit because as you're describing it, I mean, you're right. So much stuff in financial services and even in like classic kind of embedded finance, like pick on, auto lending where it's like, yeah, it's embedded in the dealership. Great. But like the reality is like the touch point is very narrow and the product is very commoditized. It's highly competitive. And it's like, you really are only competing on this one commoditized product at this one point. Yes, it's embedded in this place, but like fundamentally the product itself isn't changing. Whereas what you're describing, I mean, I love the payments example where it's like, look, if you get to the point where you're worried about which options you're offering on an invoice, you might have already skipped 5 of the 6 more important questions about actually how you can change the odds of getting paid on time.
Yeah, change the fundamental cash flow dynamics of your business, right? You miss those chances.
Right. You miss those opportunities. And even like something like the consumer financing one is a great example, right? I mean, I think that's such an interesting way of thinking about like, well, what's the actual core problem that they have getting paid? Is it collecting the money, or is it widening the pool of people who can afford their services in the first place by offering them in financing? And how do we do that? So like that to me is such an interesting broad lens. And I want to kind of bring it up to more like current times, because obviously you guys have been focused on this for 5 years. You've built out a lot of this stuff and have kind of followed these breadcrumbs kind of led by your customers into all these problem areas. I'm curious, and you mentioned the business services part, which is like money adjacent as well. When you start to get down like lower on the roadmap, so to speak, where it's like, okay, we feel pretty good about this. We feel pretty good about this. We followed this kind of down the rabbit hole a bit. As you start to get down, I would imagine that there's a wider set of like less obvious opportunities, right? Where it's like, okay, now we're thinking about things that are maybe second or third order problems for our businesses. And it's, how do you deal with taxes, which is a once a year thing, but it's really painful when it happens? How do you think about accounting? You probably already have QuickBooks or something else, but can we have a right to win and add value there beyond the standard product that you use? You talked briefly about like money storage, like, do you have a bank account? Is it integrated in the same way that we could integrate it? So as you get down to those kind of maybe less obvious or second or third order problems for these business owners that are either money or money adjacent, how do you sort of figure out and sort through which ones to prioritize?
Yeah, that's where segmentation matters, right? Because once you can start with a relatively homogeneous offering, right? Like bookkeeping, right? You need bookkeeping.
Yep.
Right. Or you are like, we're going to bring a consumer financing partner into the platform and you can offer pay over time. But then you start to go like, well, how do these different segments behave? So for example, take the consumer financing option. You start to go, well, if I'm a one-person shop and I don't have an office staff or a two-person shop, and I'm not really familiar with consumer financing, like I probably just want something that's like super easy for me to start offering and that is very passive. Like just throw it on my invoices, let people pull themselves through an application flow if they need money to pay me, right? But then you start to go, well, if I'm a 20-person plumbing shop, you may have a centralized sales team, right?
Sure.
You may have a whole sales process that says, I've got a way that I price, I'm going to create sales proposals and I'm going to make them good, better, best. And I need to work my pricing so that I can make sure I understand that I'm going to cover my dealer fee. And so I need a totally different type of offering. And so you'll start to see that like, if you just start with a one size fits all product, depending on how diverse your vertical SaaS platform is, right? Like what your vertical is. But if you start with one size fits all, like something is better than nothing, right? So you'll go from, I got 0 people taking payments or offering, consumer loans through me, and now I have some, right? But once you exhaust that sort of first layer of sort of low hanging fruit, then a lot of the prioritization comes down to what are the unique needs of your individual segments and how much opportunity is there in addressing those segments with a unique offering. And sometimes that unique offering is something that you just got to go find a different partner, right? Sometimes you're like, well, it's unique and it's unique to our verticals and that's what we do. And so maybe we have to build it, right? Or we have to own more of it. And so I think after you sort of get through that first step, it's no longer just about what's the next product, but it's really about, what's the next version of the product for who? And that's really where we spend a lot of time now.
Yeah, I mean, what you just described, I love the nuance of that, right? Because again, it's not one size fits all. And I think that maybe is kind of a misconception that people have about vertical SaaS generally is like, hey, it's one size fits all. It's this for this vertical. But as Luke and I have been having these conversations, it's so clear that like, it's turtle shells all the way down, right? Like there's like always a sub vertical or a sub segment underneath that, and you can cut it by size. So I think all of that is exactly right. And I want to ask a couple of things specific to embedded finance to someone like you who's been living in this world for a long time. The first is data. So I think one of the areas where, and this kind of touches on, do we just like plug something in? Do we build it ourselves? Do we look for a partner that we can kind of co-create a solution with? But one of the big differences between this sort of embedded environment versus selling financial services directly, and specifically vertical SaaS, whereas Luke was saying, like, you have a wealth of data on how your customers are using. The more activity and engagement you have on your platform, the more data you're generating. How does kind of that proprietary first-party data play into how you think about your fintech strategy?
Yeah, well, data is everything, right?
Yeah.
We fundamentally, like small businesses and certainly pros, they have a lot of anxiety. And even if they're good, healthy businesses, that anxiety doesn't go away, right? They're still always worried about, am I going to have the money I need, like when I need it? Am I going to be able to weather unexpected expense and those sorts of things? And so for us, like the ability from a fintech perspective, the ability to have both sort of transactional data, and ideally be in the flow of those fund movements too. But then marry that with the operational piece. So you get these leading indicators like, well, we have a calendar. So like if you're underwriting a processing stream, for example, like you know what has been paid, but I know what's coming, right? And so those are examples where you really see that you have some level of omniscience that no one else does. And what that should allow you to do is create a world where a pro can come into your ecosystem and never have to worry about having the dollar on hand when they need it.
Yeah.
And frankly, to some extent, if they're fortunate, never having too many dollars on hand, sitting around doing nothing if they should be invested somewhere else, right? Whether that's in growth or whether that's in savings or whatever they want to do. And that's really how we try to think about using our data to really solve that problem, which is if we know everything about you, pro, we're going to know the next best thing for you and the next need that you're going to have before you need it. And therefore, these financial products, they're not really going to show up as decisions you have to make. They're just going to sort of manifest naturally in your normal course of business in a way that eliminates your anxiety and allows you to focus on turning the wrench. That's what we say, turning the wrench for the pro. That doesn't always mean that you have to be the only party that can leverage your data. And so we make decisions all the time about, just because we have this data, to make good use of it in fintech, you have to transform that into the delivery of, and oftentimes like a risk-based product. And then you have to decide, like, do we want to get our piece of the value from providing data and having the data? And hey, what we do is we acquire pros, and from acquiring pros, we get lots of data, right? Is it also our job to handle a compliance management system around, consumer lending or business lending? Is it also our job to understand how to interpret that data in the context of a willingness or ability to repay? And those are questions you have to ask yourself. And sometimes you'll be like, actually, yes, like we should, we can't. And sometimes you're actually like, we can take our data, which is unique, and marry it with someone else who has a specific set of capabilities around, how to use that data to deliver a financial product that has a bunch of other core competencies associated with it that we may not have. And then, together you co-create something better. And so we do both of those. And it's, there's no prescription that I would say for like which path we take. We look at all the options and we always are eyes wide open on build by partner. And usually we make a decision, and then the next day I wake up and I say, was that still the right decision? Let's keep reassessing, because the landscape is changing. Like there was no real embedded finance partners 5 years ago and 6, 7 years ago. So like you had people like Shopify and Toast go out and build their own, and then you sort of talk to them. And I don't know, like I've never been able to ask them this question, but I'm like, if the world 5 years ago was what it was today, would you have done it or not? Right. Like, and so the fact that this marketplace has evolved and continues to evolve so quickly means that you have to continually reassess whether you are making the most out of your data and your core, given the core competencies that you have and the cost of developing or maintaining those core competencies.
You're so thoughtful about the reassessment here. Like I've always been impressed by that. Very GM-like thought process. Is this working? Can we do better? Reassess. But like it takes real discipline to do that. And like know what's going on in the space and know when you should revisit. It's super interesting. My hope is though that Shopify would say no. Like now that Pipe exists, we would not have, and we would just outsource it to them, right?
That's what
the only other thing, and I'll ask them. They're actually an investor in Pipe. The only other thing that I would like add is like, I'm jealous of your data because like we're using backward looking data to underwrite risk, like to have an attribute based on how the forward bookings compare to our forward revenue projection would actually be super powerful. And we should actually talk about that one.
Take it offline.
Yes. Yeah, I was gonna say, we can't get that nerdy on the podcast, but no, I mean it's a great point. And I will also just put a pin in one other thing you said, which is answering that question about data through the frame of the customer's anxiety, I think is exactly the right way to look at it, and is pretty unique among all the folks that we've talked to because, you're right. I mean, the sense I always get from small business owners is they want to work with people who they feel like understand their business as well as they understand their business, right? Because like the most frustrating thing as a business owner is to walk into a bank and go, look, I need a loan. And I don't have, 2 days to walk you through every aspect of what's going on with my business in order for you to understand that it's a good idea for you to give me this money. I just want you to instantly like understand that. And like the faster you can get to that understanding, the better. And that doesn't mean skipping steps from a risk evaluation perspective. It doesn't mean like being irresponsible, because sometimes, the answer is no. But it does mean like I want someone to be able to get to my understanding of my business as quickly as I have already gotten there and where I live. And it feels like a vertical SaaS platform where they run their business is the just natural place for that insight to live. And I would imagine that is the right metric to try to measure customer success on, is like, yeah, like how anxious are
I wish we had like an anxiety
and they run this business.
Right? And I was like,
totally.
I think I made a slide a few years ago, and I was painting some vision for the company or for my teams. And it was on like one side, it was, pros spend 80% of their time doing this, right? And it was like dude under sink, right?
Yep.
Pros spend 80% of their time worrying about, right? And it was like spreadsheet, right? And so like there's this huge just asymmetry in the life of a small business owner. And like I think if you can be the one that puts them at ease when they go to bed at night or wake up in the morning, you're going to end up with a long relationship with that customer.
Hey, Alex, exactly what you just described is like the reason why embedded finance is so exciting, right? Like, we're not actually bringing banking into the software. We sort of are, but we're actually making it disappear, right? Like it should just be part of the workflow to know that there's a security blanket of dollars following you around. You know that it's super easy to get paid. You don't have to spend time on it because someone like Housecall Pro knows your workflow from before you even submit the bid and even think about what the next job you want to do is. Like that thoughtful process all the way through. All this stuff starts to disappear into just, it's easy. And they can either spend more time under the sink or hire more people to spend more time under the sink and go spend more time with their families, right? Like the more you can make the financial services disappear, I really don't think that they're products. I think that they're just like they can't be the core product. The core product is the vertical itself on the task side. The financial services has to just disappear and be like as automatic as possible. And like that's what my hope for embedded finance is over time. It'll be awesome.
Yeah, that resonates.
Totally. Yeah. No, I mean, it really is like, it's just like the water you're swimming in, right? And it's just like, this feels safe. I know I have capital if I need it. I know these things are going to be taken care of. And you make a great point, Luke, about the spending time with your family thing. I mean, we talk in other episodes in this series about like the amount of time you can give back to these people, but it also matters the quality of the time, right? Like and I've had this experience, like if I'm playing with my kids, but in my head, I'm thinking about getting paid or I'm thinking about some work thing, like I'm not really playing with my kids and I'm not getting that actual time back. And so like time plus a lack of anxiety, I think is actually the time we're trying to deliver back to these people. So it's a really powerful idea. We don't need to spend a ton of time on this, but I would be remiss, Ethan, if we didn't ask you about how AI is going to reshape all of this stuff. And obviously, Luke kind of hinted at it before, but a lot of what we're discussing is the sort of art of these workflows that are tailored to specific individuals. We're talking a lot about how can we deploy technology to like save time or make things more efficient. Obviously, everything that's happening in AI right now definitely applies to some of those questions. How are you guys thinking about it at Housecall Pro?
Yeah, we think about it in a couple of ways. I mean, first, I would just say that we're very much AI optimists, right? We're long AI. I think hopefully we're on the right side of that, but that's how we approach our life every day. And I think there's a couple things that really are great, particularly around the generative AI pieces that have come out in the last few years. Because we've been heavy users of predictive AI actually from, for a long time, right? And much of the financial services industry has. And to some extent, that's kind of gotten lost, I think, in a lot of what's happened over the last few years since ChatGPT and others have launched. The first thing for us is our companies, our businesses our customers, pros, they don't have big teams. And so for us, the natural starting place was to just think about AI as your team, right? As an extension of your team. And so we have effectively thought about creating the people you wish you could hire that you can't, right? And having them do all the work for you, the way you would orchestrate your team. Like, if one of my colleagues was like, well, you know why they call business operators operators? And it's like, because, they're like, they are operating on the business and they're moving the pieces around. They're, putting people here, there, or the other. And so we think about it first from like an AI team perspective, which is you as a small, mid-sized pro will be able to have the team that you never thought you could have. And that team is then going to do marketing for you and do bookkeeping for you and do your HR for you and, and answer the phone, right? And talk to your customers and all of those sorts of things. And so that I think is a first piece for us, which is a tremendous amount of empowerment to the business that all of these things that they never thought they would be able to do can now be done because they can be done for them. And that they can still have some degree of control to the extent they want it over that team. The same way, if there were humans sitting in that seat, you'd be like, hey, like, Billy, please, talk to the customer a little bit different tone next time, like that sort of thing. And so that's really great. I think the second thing is like one of the blessings and curses of maturing as a vertical SaaS platform is that you become bigger and more complex. And you have more feature functionality. And a given user can only use a very small fraction of it at any point in time. And how can you abstract away everything that's unnecessary and only expose what is necessary to the right pro at the time that they need it? And that was like an impossibility, right? 3 or 4 years ago to think that like we are going to deliver literally a different product experience to every single user, right? You're like, well, we can have 12 segments and cut it by 6 personas, and so we get to like 150 different variations, or you can do 1,000 different variations. But now we're literally like every single one's gonna have a different one, and it's gonna abstract complexity. And so there's this tension between like the more you build into your platform, great, you're addressing more pain points that your customers have, which is going to widen your funnel, increase your conversion, et cetera. But you're also making it harder for them to use your system, right? And therefore, AI has the ability to really create, personalization real time down to the level of one. And we're using it to abstract away complexity, right? All the way to the point where like our pros, what do they do for the most part? Like they drive around in trucks and then they go work on houses. And so the reality that they can actually sit down and work software is hard, right? So for them, just being able to talk be able to talk to a system and all the way down to that. Like we think, hey, one day, like, does all this user interface that we built across all these capabilities, does it just become a little microphone bubble? It might, right? And I think it's really about how can we use it to continue to create the most amount of robustness to serve the customer segments and markets that we want to address, but deliver it in a way that is just brain dead simple.
It's hard for me. Like the way you just articulated all that is so in line with how I think about this stuff, but I haven't heard anybody else lay it out that way, which is so good, right? It really is like getting to a personalized experience that could be a branch of a million on a decision tree somewhere that the AI knows which one to show you and which button to show you next, or doesn't even need to be a button, could be a voice. It's just like it's controlling the user experience, and the user experience could be something completely different, right? This is like less than 5 years away, I think, right? Intuit back in the day on the TurboTax side got to the most simple tax experiments with an AI decision engine that only showed the next question that mattered and made it super fast and easy. But what you're saying is take that engine and apply it to the actual like user experience interfaces of the product itself and only show those things that matter. And it actually changes, but it's intuitive because it's so easy to use. Like that's crazy to think about, but it's almost possible now. Like you couldn't put a product and a design team on this without having AI create 1,000 different iterations of it and change the order in which people see it and like still have it make sense, right? So exactly. I love it. Like what you just said is amazing. It's exactly right.
Yeah, no, it's amazing. And I just think that, you know, at the end of the day, a lot of this stuff is really about, as we've been talking about this whole time, making things simpler, right? I mean, like these users that all of this is being built for, they love what they do and they don't want to spend any time doing anything other than the thing they love doing. And they don't have a lot of time to begin with. And so like saving time, making things simpler, making financial services disappear into the background, like thematically, that's the through line across all the things we've been talking about. Ethan, you've been very generous with your time. We could clearly nerd out for another couple hours easily on all of this stuff and get even deeper. But we'll let you go. Thank you so much for hopping on the podcast. We really appreciate it.
Yeah, my pleasure.
Thanks, Ethan. Your passion for helping these small businesses is contagious. So keep doing it. It's awesome.
Thanks for listening. This episode was brought to you by Pipe. Pipe helps vertical SaaS platforms unlock fast, flexible capital right inside their product. Learn more at pipe.com/fintechtakes.